Hello, everyone. Welcome to the weekly installment of the Hack.com webinar series. My name is Sam Borgi, Chief Editor at Hacked. It's nice to have you join us after a pretty catastrophic week in the market. I mean, cryptocurrencies did find a way to rebound toward the end of the week, but overall, very, very rare that we see a sell-off like we saw both in terms of cryptocurrencies as well as the stock market. So lots to talk about this week, lots of concern, lots of agitation. Volatility is at levels that we haven't seen in many years. Lots to cover. Let's get right down to it. The agenda for today, as it normally is, we want to give you a brief recap on the week that was, focusing mostly on cryptos, but also touching upon the broader financial markets, stocks, commodities, currencies, anything newsworthy or noteworthy in the market we'd like to cover. We're going to zero in on the global cryptocurrency market, looking at the market cap, looking at key moves in the major cryptocurrencies, whether it's Bitcoin or the altcoins. We want to give you a recap of Hack.com and say a few words about what could unfold as we head into next week. Now, we've all been monitoring the crypto market sell-off for quite a while now. It's been about, I would say, 3 weeks, maybe even more, where the market really hasn't been itself. It hasn't been itself in the sense that the gains that we were used to seeing for the past 12 months began to waver by the middle of January before we saw a few epic collapses to the tune of hundreds of billions of dollars over the span of a few weeks. Actually, those declines happened over the span of a few days, but overall the market has been wobbling and descending for the past 3 weeks at the very least. Well, that sell-off intensified this week as the crypto market shed $550 billion from its all-time high. So if you recall, we peaked above $830 billion in the market back in early January. As of Tuesday of this week, we saw the market essentially shed over $550 billion of that value. Widespread collapse. Bitcoin, the first blockchain currency, briefly fell below $6,000. It has since recovered, but when Bitcoin is falling that much, you know that the broader altcoin market is also on its way down. I mean, there wasn't really one main event that caused the contraction that we saw. It was mostly a combination of things, obviously egged on by regulatory uncertainty. No matter how unrealistic it seemed that regulators were going to clamp down on cryptocurrencies, the sentiment in the market generally has been that we're not sure how government is going to react to cryptos. We don't know what they're going to do to the exchanges, what they're going to do from the perspective of taxation, from the perspective of ICOs. Lots of regulatory haze, regulatory uncertainty in this market caused this collapse to happen. At the very least, you go back last month, you see South Korean jitters, not really sure about how Seoul was going to react to its booming crypto market. That triggered a widespread decline. Obviously, along the way, we've also had a lot of other negative news headlines related to cybercrime. Key exchanges have been hacked. We saw a subpoena of Bitfinex as well as Tether. The subpoena actually happened in December, but it was announced last week. Lots of negative news headlines have rattled investor sentiment. We also saw essentially a technical sell-off as well. Perhaps a lot of stop loss orders were triggered as the market declined, but we bottomed out at around $276 billion on Tuesday, about a fraction of where we were just 1 month earlier. So lots happening. Again, a lot of these declines aren't really catalyzed by one event. It's a combination of events, it's market sentiment, and it's technical trading contributing to it. It seems like speculators have exited the market momentarily. That is, those who are conducting heavy speculation in cryptocurrencies. A lot of us who like to buy and hold, obviously, we really enjoyed seeing Bitcoin below $6,000 because many of us believe that it's going to be going much higher. Don't want to get too much on a tangent. Here's a chart for Bitcoin over the past 5 days. We saw the collapse here just below $5,000, or just below $6,000, I should say, before rebounding up toward $9,000 by Friday. So overall, Bitcoin has rebounded, but it is still trading at around half of its historic highs. On the subject of regulation, we know that the U.S. Senate Banking Committee had a hearing on virtual currencies this week. In that hearing, they invited the heads of the Security and Exchange Commission as well as the Commodity Futures Trading Commission. The heads of both institutions testified before Congress, and many people were concerned about what that testimony would entail. They were concerned that it could be a foreshadowing of things to come from a regulatory perspective in the U.S. That didn't really happen. It was actually pretty optimistic in terms of how the market took the Senate Banking Committee hearing. We know that the CFTC is, the way I read it is that they're perhaps angling toward wanting or requiring more institutional power to go after or to regulate the cryptocurrency market. They don't have it yet. And in order for them to get it, they're going to need new legislation, right? So it's not that easy. But there seemed to be some talk about how what the CFTC needs in order to better regulate the market. Because right now in the U.S., cryptocurrency exchanges are not regulated at a federal level. They're regulated at a state level. So Coinbase, for example, which is based in San Francisco, it actually has licenses in over 30 states to operate. So other than that, it wasn't really, there wasn't really anything new in the testimony. The SEC continued to really focus on the ICO market, trying to prevent fraud in ICOs, reminding startups that we don't really care if you call your token a utility token. It doesn't really matter. If it has the features of security, we're going to regulate it as such. Overall, it really wasn't as big of a deal as many people thought it would be. In fact, the testimonies, the speeches that were given were made public the day before, so we all had a chance to read up on it. Hack.com, we covered it. Overall, it seems to have been a pretty good read by the market. So there really isn't anything to fear from a regulatory perspective now when it comes to the U.S. Just like there isn't anything to fear in India and in South Korea so far. So let's not read too much into the negative news headlines. Let's try to stay composed. A lot of us have a specific target that we want to reach with our cryptocurrency trading. We shouldn't let these knee-jerk reactions deter us from that goal. Here's a chart showing you the breakdown of the cryptocurrency market over the past week or so. We bottomed out here on Tuesday to levels not seen in over 2 months, but we have since recovered. We are around, the last time I checked bar chart, or the last time I checked coin market cap, I should say, we were at around $438 billion in market cap. So, although I will caution everyone that cryptos, as of late, have shown a tendency of rebounding over the weekend, only to continue lower beginning on Monday. So just keep that in mind as you track the market. Now, that was cryptocurrencies. Stocks have been on an absolute nosedive for the past few weeks. It's safe to say that the Trump rally as we know it has come to an end. That's not to say that the bull market is done, but the level of complacency that we've seen in the market over the past 12 months has completely vanished. In fact, we're now staring at recession-like volatility when you analyze the CBOE VIX. The CBOE VIX is the market's preferred measure of volatility. It tracks expectations of volatility over the next 30 days based on the S&P 500 index options. So essentially the VIX trades in the opposite direction of the S&P 500 about 80% of the time. So typically when the VIX rises, it means stocks are falling. And the VIX this week absolutely exploded. We saw the volatility gauge jump over 115% on Monday alone. I've been covering VIX for quite a few years. I've never in my life seen anything anywhere near that level. So that was actually the biggest single day gain in the VIX on record. On Tuesday, volatility climbed above 50 briefly. Overall, we settled around 29 to 30 on Friday. If you recall, during the height of the bull market, or since Trump was elected, volatility, the VIX has been trading at around 10, a lot of the times below 10. What we saw this week was something very interesting. As stocks cratered, as you can see, S&P and Dow fell 5%, more than 5% apiece. Obviously, markets that are tied to inverse volatility got destroyed. So the XIV, the ProShares XIV ETN, it's essentially an inverse volatility ETN. It tracks in the opposite direction of a different product called the VXX. Essentially, when volatility declines, the XIV goes up. But when volatility rises, the XIV declines. And the XIV, let's take a look at these numbers, okay? On January the 31st, the XIV had about $1.9 billion in assets under management. 6 days later, it had $110 million in assets under management. So there's actually talk now that the XIV might get shut down because of what we saw this week. So, I mean, the sell-off on Monday cost the Dow Jones over 1,100 points. And at one point, the Dow had posted its biggest loss of all time when you measure it based on points. Now, the VIX, it seemed like there was a lot of technical trading around volatility, and it seems like there was a lot of stop losses that were triggered that essentially led stocks to decline so rapidly, right? I mean, I think that, you know, if you have a stop loss on the S&P 500 or on the Dow, there was a pretty good chance that it got breached on Monday, and the VIX skyrocketed, and we saw that all week long. So actually, I should note that the S&P and the Dow were on track for their worst week since the financial crisis. But what we ended up seeing in the final hour or so of Friday trading is a rebound. The S&P rebounded 1.5% Friday after declining sharply throughout the day. So we did avoid the worst sell-off since the financial crisis, but we are still not doing too well in stocks. And I should add that the huge gains that we saw at the beginning of the year are all gone now. They've pretty much reversed. So huge shift in the stock market in a matter of a few weeks. When it comes to hack.com, we are keeping busy with the ICO analyses. We covered Bubbletone, Doc.io, and about 5 other projects. We are doing as much as we can to cover the ICOs that our members are requesting. On Workplace, I have put together I have shared with our members a spreadsheet where they can jot down the ICOs they want us to cover, and I'm going to share that with our writers. I know this week we covered Exim Chain. I covered Exim Chain, and the reason why I covered that one was because it was a suggestion on Workplace. Somebody posted a spreadsheet showing, promising ICOs. I decided to cover it. I saw that the whitelist had ended, a few weeks ago, but at that point I was quite deep into the research, and I actually thought, just based on the glance of the whitelist deadline, that it was a whitelist for the pre-sale, is what I thought. I didn't think that it affected the public sale. So I know a lot of you have raised concern about that, or you've been not too happy about such a promising project like Exim Chain slipping by the wayside, but we will be on top of it, and we thank you for considering and for your patience. The ICO section is one of our top priorities moving forward. The most read articles of the week, we see DigitDAO, again, for the second straight week, makes it into the top 5. Another article around Tether after its circulation spiked. There's a lot of research out there showing the circulation of the Tether cryptocurrency is rising sharply, really since December, but all of 2017. Lots of controversy around Tether. Some anonymous folks created a website essentially arguing that Tether was responsible for something like 49% of Bitcoin's gain in 2017. Other articles that were popular this week is where's the money gone? Is this a good time to buy Bitcoin? And a crypto update that we saw, are we there yet? So lots more. Visit hack.com. We have articles each and every single day covering the cryptocurrency market and broader financial universe, including trade recommendations. So what to watch? I mean, obviously we're going to be looking at a correction in cryptocurrencies. We are seeing a rally into the weekend. Will that be sustainable? Stocks, has the correction only just begun, or will we see a leveling off early next week? Very, very, very volatile market right now, stocks. And really a lot of it is tied to expectations over interest rates. A lot of this drama happened when the Department of Labor issued a non-farm payrolls report last Friday showing that wage inflation hit 2.9% annually or year over year, which was the highest level in over 8 years. Obviously, higher wage inflation means higher underlying inflation, which means the Fed has more scope to raise interest rates, and that makes everybody nervous. The fate of inverse volatility, I'm going to be looking at that very closely this week. What's going to happen to all these inverse VIX products, and what will the state of volatility be like as we head into the middle of February? Lots of global economic data next week, especially in the U.S. We got U.S. CPI inflation, which that's going to impact the market a lot if you consider what just happened with the wage inflation numbers. We also have PPI inflation, we have retail sales, we have global data as well. The U.S. dollar is actually trading at multi-week highs. Oil prices have declined as well. Is this the start of a concerted rally for the dollar, or will we see another fizzling out? The dollar actually started 2018 at its worst level, or on its worst footing in quite a few years. So keeping an eye on the DXY, which is the dollar index. That covers everyone. I hope that this has been an informative session. As always, we look forward to your feedback. Let us know if you have any questions. Email me, write to me at sam@hack.com, or leave us a message here on the website or on our YouTube page, and we'll gladly follow up with you. Until next time, have a great weekend. Talk to you later.